Power is fueled by anger, something both sides of our political divide want to harness these days, it seems. In this case, the anger is targeted at a system too long off limits to those without means. The little guy loses and the big guy gets richer. A reality as obvious as our huge and growing wealth gap, right? You all know the story of this country right now. We're waiting for somebody to somehow figure out a way to make it more equitable, more fair. We stand witness to a storm of people taking their shot, targeting the hedge funds they see as having the advantage. The rise of no-fee trading due to the popularity of online brokers like Robinhood provided access. In a way, it helped democratize investing because it let people bypass traditional commission fees. Groups like WallStreetBets provided the numbers and the community to unite the effort. The outcry when companies like Robinhood and Ameritrade.
So stand by. Shortly, we're going to hear from the CEO of Robinhood, who's going to answer for his actions in terms of why they restricted traders from being able to buy and sell GME and AMC today. So we're going to look at his explanation, and we're going to see whether it makes sense, and we'll go from there. Go ahead and click on the like button as you join the live stream. Really appreciate it. Click on the like button as you join the live stream. Buona notte.
Restrictions today just shows the fury that exists behind what for far too many is still the foreign world of Wall Street. In the face of that fury, as well as a class action suit, Robinhood will now resume some limited buying of stocks like GameStop and AMC. The question is, why did they stop the trading? Let's dig into the decision with Robinhood CEO Vlad Tenev. Vlad, thank you for joining us.
Chris, thank you for having me. This is surreal for me. I've been watching your show a lot, especially through this past year.
Well, I appreciate it. Look, you know my audience. This is not.
So he's trying to, you know, little brown nose in there. Oh, I love your show. You're my hero. Yeah, trying to soften him up. That's not gonna work, guy.
An investment show. And I don't think it needs to be. I don't really care about your capital commitments, your liquidity, and what was going on the regulatory side. And I'll talk to you a little bit about that. But I want you to address the obvious. This looks like a move by an outfit called Robinhood, which is supposed to be taken from the rich and given to the poor, and doing exactly the opposite. That when the big guys, including one of your main investors in your company, started to lose, you shut down the game to starve the little guy. Fair criticism.
That's not what it is at all. And I know you started this segment. It really resonated with me because you described the story of Robinhood. Robinhood started 5 years ago by pioneering commission-free, no account.
So this is a deflection. He's asking him about what happened today with the restricting of people being able to trade. That's what the question's about. The question's not about the history of Robinhood. You're not on this show to promote your business. You're here to be interviewed. You were asked a question to explain yourself in terms of your conduct today regarding restricting traders. So I don't know what this whole the story of Rob, like, that's not interested.
Minimum mobile investing, and we've been the spokesperson of the individual investor, and our whole goal as an institution is to enable those customers, empower them, and give them access to the markets, because for the longest time, markets have been only accessible to the wealthy. And so the entire industry adopted
Nothing he's saying is addressing the question. We want to know why they restricted traders today. That's what we want to know. Everything he's saying is the history of the company and how it's changed the industry. That wasn't what he was asked.
And in 2020, we added millions of new customers. The entire industry added millions of new customers who took advantage of the market rally and became investors.
Good for you, man.
So, you know, we had to make a very difficult decision to protect our customers and our firm.
Why?
So notice he leads with, so after all that run around in circles about the company history, he leads with to protect our customers. Okay, let's see if he explains what exactly he's protecting the customers from and how exactly he's protecting the customers. Let's see if he actually explains that, or does he just simply say, to protect the customers. Like, that sounds nice. Oh, to protect the customers. Oh, how nice of you. Why and how is what I want to know.
We in no way
Why?
do anything
Explain why
but
you had to
protect-
do it if it wasn't to protect the guys who had shorted the stocks, which are the big hedge funds. How are you helping the little guy investors?
Get the likes up, you guys that are joining the live stream. Get the likes up. Really appreciate it. Let's see if he answers the question. How is he helping the little guys? Deflection, or will he answer the question?
Well, I know that there's rumors around that, we were directed by market makers or other market participants to do this. And I want to be 100% clear. This decision was not made on the direction of any market.
So now he's making excuses. The question was not, were you directed by these firms to make these changes? Now, people are wondering that, but he wasn't asked that. He was asked 2 times now, why did you restrict your clients from being able to trade in their own accounts with their own money? And these accounts that they signed up for, they signed an agreement which has the disclaimers, I'm sure, that tells them about the risks of trading, right? So when you say you're protecting the customers, you must clarify how you're protecting the customers and in what way you're doing so. First, he's dancing around, selling his company about the history and blah, blah, blah. Now, he's making an excuse or he's defending about certain accusations about maybe he was coerced or something. That's not the question. The question is, why did you do what you did today?
Market maker or other market participants.
So why'd you do it?
Decision.
He's asking him again, why? Why did you do it? It's a simple question. Why did you do it?
Rumors around that, we were directed by market makers or other market participants to do this. And I want to be 100% clear. This decision was not made on the direction of any market maker or other market participants.
So why'd you do it?
Decision. Robinhood, as a brokerage, has lots of financial requirements, SEC requirements. We have to put up money at clearinghouses.
Notice before, you guys that are joining the live stream, click on the like button. I really appreciate it. Notice before he led with protecting the customers. And he keeps asking him why. Now he's getting into further details, but what he's talking about right now has nothing to do with the customers. He's talking about supposed requirements for him in terms of balances he has to keep and regulations and whatever. Where does the customer come in? If the claim is that you're protecting the customer and we're looking for the details, the why, the how, why are the details that you finally are coming out with? Because finally he's saying something of substance that can give an explanation for why they did what they did. But none of what he's saying now is about the customer. I mean, he's not saying anything about the customer. He's talking about them and their requirements and their regulation. Tell us how this was protecting the customers. That's what I want to know.
The amount of money that we have to put up depends on market volatility, and we're in a historic situation where there's a lot of activity and a lot of buying concentrated in a relatively small number of symbols that are going viral on social media. So we haven't really seen anything like this before.
Everything he's saying is about Robinhood. Everything he's saying, it's hard. It's like pulling teeth to get the answers of why they restricted the trading. And now we're getting some substance, and all I'm hearing is Robinhood, us. We this, we that, our requirements are this. We never had this before. It seems like Robinhood was protecting Robinhood, and they weren't protecting the customers. I mean, if I'm wrong, speak. He's being asked. He has a platform. I mean, didn't he prepare for this? I mean, he had to have seen everyone complaining about what they're doing, and now they have a lawsuit. Now you're on CNN and you're being asked why you did this. You claim it's for the customers, and instead of now explaining how it's protecting the customers, he's talking about his own interests, his own liabilities. It's all about Robinhood. That's all I'm hearing, right? This is his own words. His own words. This is the guy. That's what he's saying.
And to prudently manage the risk and the deposit requirements, we had to restrict buying in
Robinhood's risk. When he says risk, he's not talking about us. He's not talking about us. He's talking about risk to him.
these 13 stocks, but customers that held them could sell throughout. Thousands of other securities and stocks on our platform were available to freely trade. And our number one priority, as you mentioned, is to make sure our platform is reliable, stable for our customers. We're serving our customers and giving them the tools.
But that's exactly what's in question now.
We're doing everything in our power to turn.
How does restricting the trading make his platform more reliable? What does that even mean?
Turn it back on as soon as prudent.
But that's the thing, is that the trust is in question, because it seems like the only people who are getting hurt were the big shots. And that if they were benefiting from this, your small investors now believe that you wouldn't have shut down the game. And just one thing without getting in the weeds here. You don't control the listing venue for GameStop. Now, I used to work in finance, so I know this stuff, but the audience doesn't need to. The New York Stock Exchange does. So if anybody was going to control the listing and shut it down, it should have been them, but it wasn't. It was you. And the reason that they do it is very limited. They do it because they think there's evidence of fraud, or they think that there needs to be a material disclosure by the company that hasn't been made. And that's done to protect the investor. You check none of those boxes here.
That's exactly what I said in my previous video. There are mechanisms in place to protect the investors. There are exchange level mechanisms in place. There are certain rules. The uptick rule on short sales. There are circuit breakers that trigger if the market plunges down rapidly in a short period of time based on the percentage of how much the prices fall. So there's things in place. And when they are exchange level, they're universal. So it's not just for the retail guys, it's for everyone. When your orders come into the exchange, whatever the rules of the exchange, whatever those rules are, that's how your orders are going to be treated. So if a circuit breaker is tripped and your order gets down there, you will not get executions. The market has been halted. This is across the board, not a discrimination. What Robinhood did was they discriminated against their retail clients. You had the institutions able to do whatever they want within the rules of the trading. Of course, they have to abide by rules, but they can trade as normal. And you had the retail guys that were frozen, unable to buy, unable to sell at some points in time. I don't agree with that. I don't agree with that at all. It is the exchange and the SEC's, it is their mandate to protect the investors. The only thing Robinhood has to worry about is make sure, as he said, that his platform is reliable and stable so the customers can use it. Make sure that when your customers sign up, you give them a disclaimer that they can read, you understand that blah, 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 you can lose all your whatever. You try to educate your customers. You try to inform them. You make sure they sign off on that. And then that's it. Whatever they want to do, it's their money. They're adults. They're not children. Anything beyond that should be done at the exchange level and the SEC. That's the way I look at it.
Because you don't control the venue. You didn't know about any information that GameStop or any of these other stocks needed to put out. You don't have any reason to believe there's fraud that you've articulated. And you're certainly not protecting these people who've been living the dream of making money, especially at the expense of the big guys. So why should people believe you did this for the right reasons?
Well, we have no choice. We have to comply with all financial requirements and
the SEC
regulations.
hasn't said you had to do this.
Well, lots of brokers have to comply with these financial requirements and have issued restrictions on some of these names. And this is an industry-wide thing. You yourself mentioned that other brokers this week have imposed restrictions. And not speaking for other firms, but for Robinhood in particular, this isn't because there's deals happening with market makers we route to or market participants.
But then why did you allow people to keep selling but not buying? The reason that is so troubling to people is that they were making money buying the stock because they were against the short side. And so by enabling them to sell but not buy, it sounds like you were allowing the hedge funds, and again, one of them owns a piece of you, and they had a big short position. And that looks like a stinky conflict that you didn't come out straight on from the start. Address that.
Well, none of that had anything to do with our decision to do this. Again, this was just looking at regulatory requirements, financial requirements, and
he keeps just randomly saying regulatory requirements, financial requirements, without being specific. He's not saying anything about how he's protecting the customers. Everything he says is about Robinhood, and he's being very, very vague. What are the financial requirements? What are the specific regulations that you are trying to comply with that the SEC is not also saying as well? When you're vague like this, I wonder if you're hiding something.
We 100% will always protect our customers, where the entire business is operating to empower individual investors and has been since its founding.
Again, he's talking about protecting the customers, and all of this talking, he has not made one statement or one claim about how he specifically protected the customers by restricting the trading. What is the problem? Why can't he explain this?
And that's what Robinhood is committed to continue to do. So we don't want to restrict buying in these 13 stocks. We're doing the best we can to re-enable it as long as it's operationally and prudent from a deposit standpoint.
So for you, it's about how much money is in the mix and what you can cover yourself?
Well, it's about us complying with the financial and clearinghouse deposits and regulations.
Then you know what you need? I'll give you some free advice. You need somebody who sets those requirements to come out and say that this is why this happened, because otherwise it smells bad. Especially
Exactly. Exactly. If there is a specific requirement that led them to do what they did, then let us know what the requirement is. What is the big secret?
Then you know what you need? I'll give you some free advice. You need somebody who sets those requirements to come out and say that this is why this happened, because otherwise it smells bad, especially for a place called Robinhood, to have Citadel Securities, your largest customer, investing $2.75 billion to bail out one of the biggest losers in the GameStop short. They both deny, you and Citadel say this wasn't concerted action or anything, but it looks terrible. So you need somebody to justify your decision. Do you think you can do that?
Think about what's going on here. And Chris is actually doing a pretty good job here. He's pointing it out. He's like, look, this looks bad, and you don't have an explanation for it. You're dancing around, and you're talking about the history of the company and generic stuff. Oh, we got to protect our customers, and we have to comply with regulations. Totally just vague stuff, nothing specific. We're getting no substance from what he's saying. Why would that be? You're the CEO of the company. You made this action to restrict your customers. It's a major, it just looks bad right now. Everyone's talking about it. Politicians are getting involved. Now you got a lawsuit, and you as a CEO, you're on the news with this platform, and essentially you've got nothing to say.
There's a lot of misinformation out there, and I'm not going to speak for what regulators or industry professionals will say, but you can talk to any of the brokers that have made similar restrictions, and I think they'll all tell you the same thing. And this is a highly regulated industry. It's non-negotiable.
Look at how he keeps. What is the problem? I might have believed that this guy is. I mean, I'm trying to be professional here, but why does he keep saying regulations, regulations, regulations? What does that mean?
For us to cooperate with the regulators, follow their guidance, and we're in constant communication with them. So we have to be extremely buttoned up here.
I heard you, and I
we're-
saw you on another channel. They were saying, so is it a liquidity issue? So Robinhood didn't have the money to control the flow, and you said, no, it's not the issue. We don't have a liquidity.
You see that? So someone else is pushing him on the same thing. Chris did a good job on this. I don't always agree with what Chris has to say, but he did a good job. So he saw him on another show being pressed, and they talked about, is it a liquidity thing? And apparently he didn't have an answer. So it is very clear to me that there is an attempt to conceal something. I don't know what it is, but I don't feel like I'm getting an honest and transparent story. I'm not getting the full story. I don't know what it is. It could be something that just makes the company look bad. It doesn't have to be a big conspiracy where he's colluding with Citadel or whatever. It doesn't have to be something on that scale. It could simply be something about how the business is set up. There could be a certain vulnerability in the way that they set up their infrastructure, and it could be something where they were very, very risky in the way they did things, but they didn't anticipate this kind of activity. So this activity potentially exposes something, just bad design, bad business model, and they don't want to let people know, because maybe by letting people know it's bad for business. Like, wait a minute, you're telling me that the way that you handle orders is blah, 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 but what happens if we da-da-da-da-da-da? That would be a disaster. Like, it just could be a whole can of worms. Like, maybe you think it's bad. Well, if Citadel is pressuring him and he's doing I think that's probably worse, actually. But there could be something else that may not be as bad, but equally, he doesn't want that to come out. I think it's very clear that he's hiding something. That's my assessment, my opinion.
Well, if you don't have a liquidity issue, but you say you're stopping the trading because you couldn't meet certain capital requirements, how does that reconcile with itself?
Well, we feel pretty good about the situation, and we did this preemptively, right? We were looking at the deposit requirements. We were looking at the operational requirements. So we did this proactively, and we feel good about being able to re-enable these things. And we definitely want to make sure customers understand when we impose restrictions, when we lift them. Ultimately, brokers have to impose these types of restrictions because the capital requirements can change, and we're in unprecedented times, and the financial system operates in very technical ways with regard to settlement and money movement, and there's no way around that. It's just the reality of our business.
I hear what your rationale is, but again, now we're going to be watching this story because you have political forces I've never seen aligned before who want to make sure that the big guy is not finding a way to get over on the little guy because the country, I think, has just about had it with that. So you're caught in the middle, and we'll be watching, and I hope you're acting in good faith and that the trading resumes and the market can settle
I hope you're acting in good faith
itself. But Vlad Tenev, thank you for coming in and making the case for Robinhood.
Thank you very much. And absolutely, we want nothing more than to enable investing and access to as many individuals as possible. That's our mission, and it's in the name of the company.
Just got to make sure that something named Robinhood isn't rigging it for the sheriff of Nottingham. You know what I'm saying?
Oh, protecting the customers.
Set it up where the little guy can win. They should be able to play fairly and see that happen. I'll stay on it, and you have this as a venue to discuss it as we move along. Good luck.
Next up, the founder of WallStreetBets. We'll get to hear his side of the story.
The other side of the story is the individual investors who came together in places like Reddit, which is an amazing story in itself. The man who founded WallStreetBets is here. His name is Jamie Rogozinski. Rogozinski, a nice Irish name. He did step away from it last year, but he's here now. And I saw you, and I know you're heated up about this, Mr. Rogozinski. So first, Jamie, what was your response to what you heard from the head of Robinhood?
Well, thanks for having me. I just want to start by saying I hope you take a little easier on me. I don't have as much experience as him. I'm glad that I got to hear his answer. I've been asked that question day in all day long, and I've been left but to speculate. To me, it sounds like the same conclusion you were kind of getting to, which is they having a liquidity issue. I don't know enough about their profile internally. My suspicions were that they were under pressure from regulators. That's the most logical step based on the fact that Robinhood caters to this very demographic that has made them so successful. It doesn't make sense for them to turn their back on their customers. So I'm glad that I got a logical explanation out of them.
Why is it logical? Because the investor side says, look, this is exactly what happens. We find a way to finally compete by basically crowdsourcing our own investment strategy to compete with people who have more money to put into the market. And by the way, we're betting on us by trying to hold these stocks up. And yeah, we're making money, but we're going against these big guys who are just trying to take it. And now they stop the game so that they can figure out a way to not lose so badly. How are those people supposed to feel?
That's what I'm saying. I think they didn't really have a choice, and I buy into that. That's a logical thing. But these people have a right to be mad. I mean, these people are participants, and they deserve the same rights as all the big players. I think that part of the reason why the story has a feel-good component to it is because, the little guys are getting together, and they're actually being able to unite and be an opposing force to these institutions that have historically dominated this invite-only.
Hey, you guys that are listening to the live stream, if you don't mind clicking on the like button so that other people can see the live stream as well, just go ahead and click on the like button. Let's get the likes up. We only got 2 likes. We have about 14 people listening right now. Really appreciate it. Thank you.
Market. And so, they have a reason to be upset. The fact that now that they've finally been able to get a voice and get the spotlight, they get the rug pulled from under them. So I understand the anger on their behalf.
The only other thing is, I know you're not with it anymore, but do you have any concerns that you're inherently getting people into a game that is not that much unlike gambling? And that the odds may be even for everybody who goes in, but not really, because of block trades and the speed with which they can trade. And the idea of democratizing investing, is that a little misleading because of the nature of the game?
There is a new round of game. You're talking about the speed, and there's more technical components, the execution of these trades. Robinhood is not known as necessarily being the best one, but these particular the people that are coming into this type of trade, they don't care about those little things. They don't care if the other the people that are behind these orders are front running them. They don't care if
I hear you, but what they care about is it being fair. And it's interesting. You gave them a place to come together, and they did something that was really interesting about power of the people, even against the power of the powerful. And I appreciate you for talking to us about it. Thank you for being with us to kind of give shape to this story, and we'll be watching it, all right?
Thank you for having me.
Taking the opportunity was your choice, and thank you. Thank you for watching The Big Show. CNN Tonight with D. Lemon starts right now.
Wow, that's one of the things I don't like about mainstream media. So they spent all this time talking to the Robinhood guy. I mean, he's the main guy I wanted to hear from anyway. And then the WallStreetBets guy, what is it, like 10 seconds, and then that's it? Now I've got this clown over here, Mr. Whatever his name is. Anyway, comment below. Let me know what your thoughts are. What do you think about the explanation from the Robinhood guy? I mean, I've been in the investment banking industry for a while, and as an insider, I'm not in the hedge fund side of things, but I'm not happy with the explanation that was given. I feel like he's hiding something. I don't know what it is. I know people are speculating about that there is an interaction between Robinhood and these hedge funds, and maybe they called them up and pressured them. Hey, man, that could be the case. I got no evidence to support that actually happened, but I wouldn't be surprised if that happened. But I also, would like to say that you guys should also consider that maybe this situation exposed something about Robinhood's business that is embarrassing for them and that will be bad for business. something about how they are set up behind the scenes. There's some kind of flaw, or just something it's a really dangerous thing that they did. They didn't anticipate. It's kind of like maybe you have it's a top secret location, military installation, and you've only got like 3 guards or something. Everybody would assume you have more than 3 guards considering what you're protecting, but you've actually only got 3 guards. And then something happens, and because you only have those 3 guards, they have to do something kind of crazy, and people are asking like, why did they do that? Doesn't make any sense. And then you're like dancing around and like, well, blah, blah, blah. And you're being very vague because you don't want to say, hey, we only have 3 guards protecting this large installation. Because if that got out, I mean, whoa, so it's either something like that he's hiding, or it's something potentially unethical, perhaps even illegal that may be going on. But this is pure speculation. I have no idea. The only thing that I'm fairly confident in is that I don't feel we got the full story. I don't know what the full story is, but I don't feel we got the full story because I see no logical explanation for why this guy, as a CEO of the company, this has been going on for some days now. Everyone's been talking about it. Why would he go on the news and not even attempt to explain himself? Why would he just keep talking about protecting customers, regulations, protecting customers, regulations, protecting customers, regulations, protecting customers, regulations, like nothing specific, totally vague. He starts off with customers, and then when he gets into more details, he starts talking about totally about Robinhood. Oh, we have regulations. Oh, we have requirements of deposits and this and that, and we have to make sure that we. Nothing about the clients. Anyway, those are my thoughts. Comment below. I'd love to hear your thoughts. Really appreciate the likes for those who were able to join the live stream. And again, let's let the conversation continue in the comment section below. Share your thoughts. What do you think about Robinhood restricting trading? Do you think they should have done it? Why do you think they did it? And what do you think happens next in terms of the lawsuit, in terms of Robinhood? Are they scared now and now they're going to stop, doing these games? They claim that they're going to allow you to trade, but there's going to be some restrictions where I'm not sure how they're going to do it, but it's like maybe you can buy, but you can only buy a certain amount or something to that effect, some kind of throttling it looks like they might be doing. So in other words, instead of completely shutting you down from trading, they're going to give you this sort of a handicapped trading ability for some reason. Anyway, so tell me what your thoughts are on the lawsuit, about what they're doing, and also what does this mean for GameStop tomorrow? Tomorrow's the day, guys. Hold the line. Hold the line. I don't know what's going to happen with the restrictions. I don't know. Robinhood had a lot of guys. I don't know how big their orders were, but on the day that Robinhood pulled, it's not just Robinhood and TD Ameritrade pull these stunts, we see a very sort of anemic market, especially AMC. AMC was on life support. It's just like it kind of went up a little bit, then it went down, and it's just kind of hovering around. It's kind of like it's like it had no energy at all. And then GameStop was insane. You had this massive surge. Both of them actually had massive volume in the beginning, but GameStop had a massive surge in terms of the price, shot up to, what was it, 400? I don't know if it got as far as 500, but definitely 400 for sure, 400 plus very quickly. I highly suspect that was the hedge funds trying to panic the retail guys. And the way that would work, potentially, if they were doing that, would be a manipulation thing, which they're not allowed to do. Basically, by adding a bunch of orders, like trading aggressively, they further push the price up. So it's kind of a domino effect. They're making the situation even worse, where it's like, and it sounds crazy, like, why would you do that? There's actually, I'm former Air Force, and there's actually a technique where back in the day anyway, a missile evasion tactic where a missile is locked onto you, and there's a technique where the thing to do is to actually turn into the missile, something based on what the aircraft can do and what the missile can do, and how it's seeking you you can actually get away from it by turning into it. So maybe they're doing something like that, where why you do that is by you doing that, you're pushing the price up even more. And what you can do is, if you do that really quickly and in a short burst, you buy a lot, push it up, push it up, push it up, and hold and let the momentum drive it up even higher. They have a lot of money, so this could have been like really, really large orders, right? So you're holding a lot of stock, and then you're watching it continue to roll up while you've stopped. It's other people are like, it's happening, guys, and they jump in, and people start buying, and the price goes up. Now the value of your position has risen dramatically, $10, $20 per share. Maybe you have 20 million shares, whatever it is. That's a lot of money really quick. And then you flip it. You just start selling, and just dumping the stocks. What you're doing is two things. You're trying to extract your profits that you just made. I mean, you could have made, $5 million in profits right there in a seconds, a few minutes or whatever. You pull that money out of the market by selling those orders and extracting those profits. So now your cash is much higher. And then by doing that, you also panic the retail guys. So the retail guys are like, oh no, it's collapsing. And then people are afraid. They're like, I don't want to lose all my money. So then the retail guys keep selling. And then that's a secondary effect. So the first effect is to get more cash from, pushing the price up a little bit more and then selling really quickly. The second thing is, by you selling really quickly, you scare the retail guys into selling as well. They start selling their positions, running away, whatever. And then you're bringing the price down, which is ultimately what you need, because you sold short. So therefore, you want to ideally buy back the shares at a lower price than you sold it at. And the closer you can get to that price, the better it is. And when you add to that you just made profit in this move that I just described, now you don't actually need necessarily for the price to go down all the way to the price that you sold it for, because ultimately you want to end up where you're not negative. So if you add up the amount of money that you just made in this move, plus the money that you're going to end up with at the end of you're covering your short, if it ends up where you don't owe anything, that's ultimately the big risk. That's the big terror for the hedge funds. If they have to pay too much to buy back these shares, then they're going to end up owing money. So they're going to have to actually go into their money and find additional funds to pay this thing off, and it could be devastating. So I don't know if that's what happened, but I would wonder if something like that is what caused the surge. It would obviously not just be that, because there was a lot of news the day before. So you have a lot more people that are like, whoa, people are getting rich off of GameStop. So that could have introduced a lot of new people, stragglers, who jump in the morning, and then, he's buying, she's buying, he's buying. And then so a lot of that's going on. And then all you need to do is a little gentle nudge as far as the hedge funds to push it up even further. And then you just tumble the whole thing down, because after that, it just started coming down fast and dropping. And now I think it's what's the latest? I think it after the close, it's recovered a little bit. So the last price I have is 262 after a close of 193. So jump back a little bit significantly after the close. So I'm anticipating that we could be looking at another crazy surge tomorrow. How high will it go? I don't know. It could be a repeat of yesterday. Or it could go even higher than that. But the big challenge is going to be, if it does surge, when do you jump off this train? How high is it going to go? How high are you going to take it? Because in this game, last man standing is not the one you want to be. I would consider this to be perhaps musical chairs, right? So right now, the music is playing and everyone's having a great time. But I'm afraid, very likely, I mean, I can't predict the future, very likely the music is going to stop playing. And when that happens, you better grab a chair real quick, because otherwise you'll be left standing and it's not going to be good. So what that means is you better have a strategy about how you're going to exit your positions and when you're going to do it. And you better have a backup in terms of consider what is the maximum losses you are comfortable with accepting, and make sure you do things like whatever works for your strategy, whether the stop limit orders or whatever it is. You better have things set up in place where, because this thing can move very, very fast, as you saw happen today, and you're not going to be able to move as quickly as the market's going to be able to move. So ideally, you should have something set up as a backup to protect yourself. So if things collapse, make sure that you have something that will protect or limit the potential losses for you, because you don't want to let this thing get away from you, and you lose a ton of money in the blink of an eye. Maybe tomorrow is the end of this game. Maybe it continues into Monday. Well, that's the name of the game, right? If we knew what was going to happen, then we would all go and do what it takes to profit, right? At the end of the day, we all got to make our judgment calls and figure out what risk levels we're comfortable with. And as I always tell my subscribers, never invest more money than you're willing to lose. Every time I hear stories about people who they invest and things don't work out, like, oh, I lost my this and whatever, that's on you, man. It's not even about that you made the wrong decision in terms of buying the wrong stock or your strategy. That is not the issue. The issue is that you invested more money than you're willing to lose, right? There should never be a trade that should hurt you, right? Any trade that will hurt you or could hurt you is a bad trade. Never invest more money than you're willing to lose, right? Of course, we all want to win, but if things don't go your way, it should just be like, well, I tried, I lost, so be it. But if you're going to end up selling your home and, your college fund is gone, or don't do it, guys. Be responsible. Don't do it. I mean, it's your money. If that's what you want to do, do you. But I highly advise you to be responsible. Not so much about your strategy necessarily, because no risk, no reward, but about the money that you're using for whatever strategy you're using. Don't invest more than you're willing to lose, guys. I'm not even gonna try to pronounce your name, because I'm gonna mess it up. You're gonna get mad at me, and you're never gonna watch another one of my videos. I'm just gonna say why. Are we watching a war play out in the market? Absolutely. I've been in this industry for what is it? I keep saying 20 years. I guess it's 22 years. So I've been in this industry for 22 years. I've seen a lot of crazy things. I have never, ever seen anything like this. I would say the latest thing that I saw that was dramatic for sure was the crash in March of last year, which fortunately for me, I was ahead of that. I exited the market prior to the crash. I jumped in close to the bottom. So my portfolio is looking really, really good this year. If you look at my positions, it's like up 40%, up 37%. Everything is like insane. But the crash that happened in March was pretty crazy. I remember it was like 3 days in a row or something, multiple halts, short sell restrictions, we had alerts going off all day long. I mean, it's insane. When you're on a trading floor, it's it's a different world, man. It's kind of crazy because you have to imagine you have traders all around you, and everyone has alerts set up for different things. There's different sounds, bells, and maybe somebody's speaking, you got it, you got it, or like a cash register, like cha-ching, cha-ching. So you got all these sounds going off, and then when the crash happens, you have a lot more of that. You have the market randomly being halted, and then you see traders standing up and they're all looking around, and I mean, it's just insanity. You go in the office an hour or two early, make sure that everything's good to go, because high level of risk, and you hope nothing fails, because that'll be very, very bad. Anyway, I ran this live stream on a lot longer than I wanted to or intended to. Always great to see you guys. Up Render and Yo, good to see you. And Geary, thanks for watching. Thanks for the likes, and let the conversation continue in the comment section below. Let me know your thoughts. What do you think about Robinhood and what they did? What do you think about what's happening in this battle between the hedge funds and the retail guys? Who's going to win? Is the little guy going to finally win? Or are people like Robinhood going to get in the way of that and shut down the party? I'd love to hear your thoughts. Thanks for watching, and everybody, good night. I'm gonna try to get some work done and then get some rest, because tomorrow is game day. I'm loaded up. I'm loaded up on some AMC. I'm light on GME, and I gotta be ready, because in the first few hours of trading, I am expecting extreme levels of volatility, and things could go one of two different ways. So one of the things I'm going to be looking to do is, if it surges like I'm hoping that it does, I'm going to look to capture as much returns as I can quickly, and then I'm going to cut down my positions to minimize my exposure levels. And then I will ride the wave a little bit longer with a much smaller positions, just so that I can maximize my returns while limiting my risk. If I just sit it out and ride the whole thing, and things don't go my way, then I could lose. I mean, my positions are not a large percentage of my portfolio, so my risk is limited, by a significant degree. Like, I'm not one of these guys like all in 100%. No, I got a bunch of positions in different stocks. However, I do have sizable positions in AMC and GME, so I could potentially, I mean, at most, I could lose, I don't know, $400, $500, which is not the end of the world, but that's a level of risk that I'm okay with. But that's gonna be it for me. Try to get some quick returns in the early morning trading, and then minimize my position. So do some sells, and then hold long on a much smaller percentage of my holdings. And I gotta keep an eye on it. Set some probably some stop limit orders, so that if it suddenly reverses and goes down, that I exit. But keep in mind, exactly what I just described. You got to think about these hedge funds, like they're professionals. They've been doing this for a very long time. They have PhDs. They're mathematicians. So exactly what I just described. I mean, imagine that it's a game of chess, and these guys are chess champions. So when you're in chess, you're supposed to think moves ahead, right? So you got to think about what move your opponent might make, and think about it like it's really like a chess game, right? So what might these retail investors do if I do this? What if I do this? What might they do? So the idea of what I just thought of, that they could think of the same thing and use it to exploit and control the retail guys, you got to think about stuff like that. So imagine I'm a hedge fund and I am going to try to jump in on the initial surge, push it up a little bit, and then start doing some, again, the aggressive selling, like I said before, to panic some people. And even if I don't panic some people, if other people are trying to protect their positions by putting these stop limit orders, that's the thing. Predict that a certain amount of the market are going to do similar things that I just described, which means even if you haven't panicked at all, if they can make the price drop to where it triggers your stop limit, then you're out. Right? They just automatically kicked you out. You kicked yourself out, right? Because by putting that stop limit order and them pushing the market down to your price, now you sell a bunch of shares. And if a bunch of people are doing the same thing, think about the effect cumulatively. So imagine a bunch of people stop limit orders start triggering one after the other, and that sells. Even though you didn't do anything, you set the order, you set that sell limit, that stop limit order. You set that ahead of time, and you could be sitting back just watching this thing. And again, if they get the price to pass between that threshold of a good percentage of the retail guys, then that can be an automatic sell, even though no one's doing anything, right? What is the probability of people using that strategy in terms of the stop limit? How many people would do the stop limit? How much below the current market price is the average person going to put their stop limit at? These are the kinds of things that some of these sophisticated traders will be thinking about and have really sound mathematical strategies in terms of how to predict it and manipulate sort of statistically. Statistically speaking, at least 40% of investors will probably put a stop limit price that is 5% below their, you know what I mean? Like whatever, they can figure that stuff out and then play with that and basically manipulate the market. So anyway, guys, thanks for watching. Have a good night once again, and I'm out. Bum 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 bum. That's all, folks. Click on the like button. Thanks for watching. Ciao. Buonanotte. Buenas noches. Arrivederci.
Taking the opportunity was your choice, and thank you. Thank you for watching The Big Show. CNN Tonight with D. Lemon starts.
No. The Big Show is Carlisle Speaks Wall Street. And I'm out. Hold the line, boys.
People are doing that. So, but this is the layman's